Thank you very much, and good morning, everyone. I am very happy to. Now, I've titled this talk While You Were Out for a very specific reason. The last time I spoke to the CFO series in Melbourne was the 10th of June. The 10th of June is remarkable because the 9th of June was the last day before the end of October that Victoria recorded 0 new COVID-19 infections. And then on the 10th of June, things started to change. And when things started to change, well, that's when we hit the brick wall. And all of a sudden, everything was focused, and really, not just in Victoria, but all around the rest of Australia about bringing that second wave under control. Victoria went into this extended lockdown. I don't have to tell any of you about that because you've all lived through it. But the beautiful news here is you've all come through the outside. And I have to say, speaking as a Sydney-sider, and I've just been informed that you've had another double donut day today, so that's 13 days, which is amazing. I have to say, as a Sydney-sider, and I think as an Australian, we are all immensely proud of your work and blown away by it, because you've done something that effectively almost no other country has done, which is to bring a second wave under control, to basically bring it to eradication. But that took all of our focus. That took all of our attention. And while we were out focusing on the problems that need to be solved, interestingly, the world kept on moving on at a gallop. And what I want to do is I want to take a look at some of the changes that have happened sort of over the last year, then over the last month, and then over the last week, because they show you an increasing scale of events that is transforming the way that we think of money. Now, this all really kicked off just about a year and a half ago. So in the middle of June last year, Facebook announced that they created their own form of money that they called Libra. Now, why would Facebook create money? Well, because Facebook has more than 2.5 billion monthly users. And a lot of them can't transact in any way on Facebook because a lot of them, well, they may be banked, but they won't have access to a credit card or some other instrument that allows them to pay for things online. And Facebook looks at that as all of this revenue that they could be receiving if these people who all have smartphones and who all have Facebook had some way to transact. So what they did was they created a cryptocurrency, a digital currency that they called Libra. It was going to be backed basically by a basket of different real-world dollars and euros and yuan so that its value would remain stable, and they got a stable of 30 really big companies to come along for the ride, and they said, okay, we're going to do this, and we're going to bring this form of new digital currency, which will live in your smartphone and not in a physical wallet and not in a bank account, but will be data that can live in your smartphone all of the time. We're going to bring that to the world. And the first thing that happened as soon as Zuckerberg announced that was that he got enormous pushback from central bankers, from regulators, and from governments all around the world. Libra has stalled. Now, it's still moving toward a rollout around the first quarter of next year. But it really isn't important for what it is. It's important for what it started. Because within days after the Libra announcement, the People's Bank of China, that is the Reserve Bank of China, announced that they were launching a full open-scale trial of what they call their Digital Currency Electronic Payments System, or DCEP. DCEP is essentially a digital version of the Chinese yuan. It is a fully digital version of their currency. And they started very slowly at the end of last year with rollouts in some of their cities. It got stalled a little bit as they were dealing with their own pandemic. And then as China came out of the pandemic early, they continued this rollout. And they're continuing to broaden the rollout. So last month, they literally airdropped $10 million of this new digital yuan to Chinese who would sign up and would promise to get a new digital wallet to hold this digital yuan in. And the Chinese have been very clear that by the time they host the Winter Olympics in 2022, so that's, around 18 months away from now, that it will be fully integrated into the Chinese economy and that they will be using it broadly at all of the Olympic venues. So they're expecting that this will be ramping out across the Chinese economy. Now, in order to do that, they're going to have support in terms of users. They have the users now. They have many millions of wallets holding some of this money that they gave away. They're up to 30 million transactions so that they know that the system is working. They're now working on having the system scale, and a lot of that means that they're going to need to work now with smartphone vendors, Huawei being the big smartphone vendor, not just globally, but also in China. And Huawei has announced that they're integrating their own digital currency wallet into their operating system so that all Chinese users of Huawei smartphones will be able to hold and spend digital yuan. All right, why is China so excited and pushing so hard to create a digital currency? There are a couple of reasons here. The first of which is that although this is a digital currency, it isn't really like Bitcoin or other cryptocurrencies, which are fully decentralized, fully transparent. Everyone can see all of the transactions, although all those transactions are pseudonymous in a giant ledger. The People's Bank of China's DCEP provides the central bank with the ultimate authority on the ledger. So this means that the People's Bank of China, and by extension, the Communist Party of China, has a look into every single transaction that happens using the DCEP, using the digital yuan. This gives them unparalleled, and actually from a couple of years ago, almost unimaginable surveillance capabilities within an economy. It also means that they can invalidate any transaction so that you may hold money, but you become unable to spend that money because the state essentially refuses to authorize those transactions. So that's one thing that we need to look at here, but there are other reasons that are I think, probably less scary to think about. Second reason is that this is going to be the big example of soft power in China in the 21st century. Now, the former Australian ambassador to China was speaking at the National Press Club yesterday, and he talked about China's continuous failure to use its soft power potential. And I think that the DCEP is going to be a big emphasis of Chinese soft power, financial soft power in the 21st century. They're first out the gate, and we'll see there are going to be many other examples of what we call CBDCs, or central bank digital currencies. And they're establishing it, and they're also now going to use it as a mechanism for exchange, not just in China, but with all of their partners. So think of all of the partners that they signed up for the Belt and Road project. They're probably going to be transacting using DCEP when they're making transactions internationally. China will probably start to ask its trading partners throughout the world, including in Australia, which is why this is an important discussion to have now with you, to start to use DCEP for remittances and payments. So this represents the leading edge of the future and the leading edge of Chinese soft power. And the third reason is simply that China is, without question, the most sophisticated digital payments market in the world. I remember being in a supermarket in Shanghai in 2016, trying to pay for something, and I was the only person in the line at checkout who paid with cash. Everyone else was using Alipay or WePay, just scanning a QR code on their smartphones, and the funds were instantly transferred from their accounts. So this was the first time I'd ever anywhere seen a fully digitally payments infrastructure. So China's got the most advanced and most smartphone-based digital payments infrastructure in the world, and this has really helped set the tone for where they see the rest of the world going over the 21st century as we proceed into a fully digital payments economy using a fully digital currency. So the Chinese are now way ahead of everyone else, and that all happened over the last 6 months while we were out. Now, that's what's happened over the last year. Then there's what's happened over the last month. On the 21st of October, PayPal, which is the largest payments network in the world, was built for the web to handle payments internationally on the web, with 500 million users and 21 million merchants attached to its network. PayPal announced that it was going to, early in 2021, allow its users to buy and pay for purchases in 4 cryptocurrencies: Bitcoin, Ethereum, Bitcoin Cash, and Litecoin. Now, Bitcoin, Litecoin, and Bitcoin Cash are all relatively similar. You've all heard of Bitcoin. It's a cryptocurrency. It's become a store of value. People don't normally use it for transactions or for payments because it's got a lot of weight associated with it. It's also quite expensive. But PayPal is going to make it available to all of its customers. And all of a sudden, the number of people who will be capable of trading in Bitcoin will increase dramatically. Now, to do that, PayPal is bending some of the rules on how Bitcoin works because in Bitcoin, it's pretty easy for me to do a peer-to-peer transaction. I can send money directly from my Bitcoin wallet to your Bitcoin wallet. All I need to do is know the Bitcoin wallet address. PayPal can't do that because they have to comply with all of the regulations around international currency transfers for all of the domains they operate in, which is basically everywhere in the world. And so what PayPal is doing is effectively creating a walled garden where people will be able to buy Bitcoin inside of PayPal, use it to pay for transactions inside of PayPal, and then they can't actually just send the Bitcoin to someone who's outside the PayPal network. They'll need to convert it back to a standard currency, a state currency like a dollar or yuan, and then send that on. So this is going to be a big walled garden of people with access to cryptocurrencies, but it won't be the same kind of free-for-all that we've seen in Bitcoin so far, which has been used to finance all sorts of illegal acts, and that's one reason why PayPal can't go there. But that said, PayPal is going to make a big change in how people use cryptocurrency. If I wanted to send someone some Bitcoin, I'd have to know their wallet address. You can see this big number in black down here, right? There's that big 19EM. That's a Bitcoin wallet address. It's very hard to remember. People often get it wrong. It's useful, but it's really this enormous barrier to adoption of cryptocurrencies because it's very hard for people to get their mind around, I'm sending money to this account number. PayPal doesn't use account numbers. What does PayPal use? PayPal uses email addresses. And all of a sudden it means that for the 500 million people who use PayPal to transact and make payments, they'll be able to send Bitcoin or any other cryptocurrency around just by using an email address. And this fundamentally changes the way people think about using cryptocurrencies and the way that people use them forever after, because people will always be looking for a solution that is easy, as straightforward as the one offered by PayPal. And if you think about it, PayID works much the same way. You can send money to me by my email address. So we're already getting to that level of digital payments here. PayPal is now extending that to the idea of cryptocurrencies. All right. Why is PayPal doing this? PayPal has really kind of been against cryptocurrencies. They're a fundamental competitor because they're used to make international payments. Why is PayPal getting into the game at this point? Well, there's two reasons here. One of them is that PayPal, because it is so big, because it has 500 million users, just by its presence changes the game in cryptocurrency. Just by having 500 million people using cryptocurrencies means that people will be coming up with new ways of using them, new things to use them for, and also will be getting people much more familiar with this idea of a digital currency that doesn't live in a bank account, but lives in your account on PayPal. PayPal is doing this because, as the CEO of PayPal announced just last week, they can see that these central bank digital currencies, these CBDCs, they're coming. And they're coming like a freight train. And PayPal knows that right now the most important thing that it can do is it can prepare itself for those central bank digital currencies by giving its user base some experience with digital currencies, by giving its IT infrastructure and its regulatory management, all of this kind of testing. So you can think of all of this, what's going on with cryptocurrencies right now. It's basically a test for when PayPal opens itself up to DCEP and the other cryptocurrencies that are coming. Because this decade, the 2020s, what we're going to see will become the decade of digital currencies. And if you don't believe me just by saying it, well, we need to look at what happened last week. Last Monday, something completely unexpected happened. The Reserve Bank of Australia announced that it was going to create a wholesale digital currency. What does a wholesale digital currency mean? Well, it's the kind of currency that you use basically to settle accounts between banks, or to settle accounts between banks and the Reserve Bank or other sorts of large financial institutions. It's not a digital currency that normal Australians will probably ever see. Normal Australians kind of have no reason to see a digital currency because our payments infrastructure is already so good, so widespread, and so resilient and available through so many means that the pressure to create a digital currency perhaps isn't the same as it might be in other parts of the world that don't have the same high degree of really well done digital payments infrastructure. But The background infrastructure for bank settlements in Australia is still quite old. It's probably still sort of batch settlements that are done every evening on a mainframe computer. Moving to this form, and they're going to be using Ethereum for this. Ethereum is a form of cryptocurrency that has its own code built into it. You can think of it as money that can run a program. It's money that is capable of making decisions and thinking for itself. So these settlements will be written in this Ethereum smart money, and so that the bank settlements will be happening effectively instantaneously all day long. So these wholesale settlements will be happening in the background, and they'll be creating a new layer of auditability and stability, resilience, and speed within the Australian payments system. Now, the RBA had started off a few years ago being, why would we need to do anything like this? What are the uses of blockchain? We don't see any uses. And you can see that step by step, they've been getting closer and closer and closer to this moment where they're adopting the idea of a digital currency as being a fundamental tool to the management of economies in the 2020s. And this is the big change that happened while we were out, is that there has been a penny drop moment. While all of the world has been focusing on the pandemic and all of the consequences and how to get beyond the pandemic, the real world that will greet us in the world beyond the pandemic is a world where digital currencies will be more and more often integrated into the financial system at the wholesale level, as we're seeing here at the Reserve Bank, or at the retail level, as we're seeing with the digital currency electronic payments system from China. But they're setting the stage for this. And what PayPal is doing is now exposing 500 million of its own users to this idea to make it comfortable. So really, this idea of digital currencies will be coming from every point in the financial system to every point in the consumer and business system. And it's not just happening in Australia. Last week, Christine Lagarde, who's now the head of the European Central Bank, made an open call for suggestions on the design of the EU's digital currency. We are at a point now where the movement toward digital currency is pervasive, where it's going to be happening, and every central bank has announced some plan to be able to move itself toward a digital currency. What that's going to mean for all of the financial instruments and financial tools and financial systems that are in place now, that's the open question. And that's not a question that's going to be answered in 2020 or 2021 or 2022. What we're going to do is we're going to start to create these tools. We're going to start to use these tools on a small scale. And then we're going to start to make lots of mistakes with these tools because they are new tools. They will work differently than the kinds of tools that we've had before to deal with money. And so what we're going to see now that we're back at our desks, now that we've returned, now that we're checking through the notes, now that we see what's happened while we were out, what we're going to see is a continuous progression into a more and more digitalized money economy. Digital currencies represent the biggest change in the quality of money since paper money was invented 1,000 years ago. And that's what happened while you were out. Now, if you want to learn more about PayPal and digital currencies, I just dropped the latest episode of my podcast, The Next Billion Seconds. It focuses on exactly what happened at PayPal and exactly what that means for the future of money. Thank you all very much.